Stocks to Watch May 2018 edition. That's what we're doing here today. As always, one of my favorite videos I do each month. I get super pumped up for these ones. 3 stocks to watch in May 2018. Very interesting companies, okay? 2 of these companies are absolute giants, all right? And they're expected to report numbers in May, all right? The other one is the most talked about stock probably in the entire stock market right now. And this one is supposed to report numbers in the month of May. So this is going to be very, very interesting, guys. I hope you really enjoy this, and let's get into it. The first stock to watch in the month of May is going to be Apple. Now, before I get even into what you're supposed to pay attention to here with Apple and whatnot, and all the stuff that's going on with Apple, I want to explain something to every single person watching this right now. I don't care whether you have a dime invested in Apple or not. Apple stock literally affects you, okay? Apple stock literally affects you no matter if you have a dime invested in that company or not, okay? And here's a few reasons why. Apple is such a big company that literally if Apple is to make a big move up or down, it will affect the entire market negatively or positively. For instance, if Apple goes up, let's say 5% on a day, it's almost impossible for the market to go down. And the same way, if Apple goes down 5+% in a day, it's literally almost impossible for the market to go up because Apple is the biggest company in the world and it has such heavy weight and it affects so many companies, so many semiconductor companies, all right? The Skyworks Solutions, the Cirrus Logic, the Qualcomms, Texas Instruments, Cuervo, just company after company after company is affected directly from Apple. And those stocks will go up or down depending on how Apple stock goes because they're huge suppliers of Apple, all right? Also, if you had a 401k or you're invested in an index fund, of a high probability some money is invested in Apple stock, okay? Let's be completely honest. It's the biggest company in the world. Almost every single, mutual fund manager or hedge fund manager out there probably owns some Apple stock. So you probably, are actually indirectly own Apple and you don't even know it. Also, if you own Facebook or Snapchat or Twitter, well, those type of mobile platforms, what do you think they're used on? Apple devices. Every single person out there is affected by Apple and should absolutely care regardless if you own the stock or not, okay? I just want to explain that. So Apple should be reporting numbers here on May 1st, and it's going to be very interesting because everything's negative right now in Apple as far as like sales go. Morgan Stanley, this Katie Huberty, she slashed her iPhone shipment projections for the quarter ending in June on Friday, citing weakness in China. Canaccord Genuity's Michael Walsky also cut his iPhone sales forecast and cut his earnings estimates for Apple too. It doesn't help that the chief financial officer of a key Apple supplier, Taiwan Semiconductor, warned of mobile softness and continued weak demand when it reported numbers this week, okay? So very interesting there. Now, something I want to draw your guys' attention to is the fact that this whole iPhone sales are weak thing, this is nothing new to Apple. This happens every few years, okay? Look at back in 2014, spring iPhone sales are looking extremely weak, okay? Tons of articles at that time about, iPhone sales are weak. Back in 2014, more in 2014, Apple iPhone sales disappoint. And then we go into 2015, Apple may have slashed iPhone 6s orders due to weak demand, okay? Articles all about that. Then we go into 2016, more articles, Apple's big trouble in little China, iPhone sales, 7 sales are weak and revenue is down year after year. Now this year, obviously it started in December, Apple suppliers drop on weak iPhone 10 demand. Year after year, there are worries about Apple sales, okay, as far as the iPhone goes. Oh my gosh, iPhone sales, they can't grow anymore. They're going to decrease. It's all bad. It's just bad news. And their business is going down the trash. Almost every single year, it seems like that's like what's talked about. But then we look at the factual information and we see that in 2017, Apple sold 216 million smartphones, okay, iPhones, 216 million iPhones, and then we realize, oh, they're like insanely dominant, okay? So this almost happens every other year. There's a lot of worries about iPhone demand. It's always short-term stuff, and then, Apple grows long-term, okay? And that's just kind of the way it is with Apple. This always happens. 2014 it happened, 2015, 2016, 2017. It's happened in 2018. Always happens, and it will continue to happen. But as far as if you're looking at a long-term perspective on Apple, does it really matter if Apple, sells an extra 2 million iPhone units, this quarter versus the next quarter or versus next year. It really doesn't if you own the stock long term. It's just short-term mumbo jumbo that's affecting Apple, the suppliers of Apple, and just the markets in general. Now, let's look at the numbers analysts are expecting here. So, analysts are expecting, as far as the EPS goes, analysts are expecting them to do around $2.69, right? That's versus $2.10 a year ago. That number should be very, very, very easy to beat. I'll explain why in just a second, okay? I would be extremely surprised if they miss that number. Let's just put it that way. I'll explain in just a minute. And then as far as revenue goes, analysts are expecting revenue to climb about 15.5%. So very strong revenue growth, especially when you're already the biggest company in the world. Now, why would Apple likely beat on that EPS number? Well, there's a lot of things going good for Apple right now, okay? One is taxes, okay? Their taxes just got dropped dramatically, okay? So that should make them much more profitable, okay? Also, Apple has bought back a ton of shares in the last 12 months, okay? Meaning there are less shares to be counted against that net income, which usually makes the EPS look much better, okay? That's another thing. Also, services has been growing, 20+% for Apple, and that's a straight profit machine for Apple, okay? Also, ASPs on iPhones have gone up, so which means iPhone profitability should also be up. There are so many, different things you should look at on why Apple should easily probably beat that number. I can tell you if they do miss that EPS number, then that means that Apple sales were really, really, really weak. I would be extremely surprised if somehow they miss analyst expectations on EPS. We shall see. We shall see what happens, but I'm just going to tell you if they do miss, then that means their numbers were really, really weak because they should easily be able to beat those analyst expectations with all the stuff they have going for them, okay? So that's Apple stock. Let me know if you guys own Apple stock, if you're doing anything down there in the comments section. Stock number 2 you're going to want to watch in the month of May, and it's going to be very interesting, is Walmart. They're also supposed to be reporting numbers. And Walmart, it's all about online in the future. Where is their online business going? At least from my perspective. That's what it should be about, right? They're expected to roll out a new website this upcoming month, and I'm not sure how I feel about this new website. I don't know if it's even that much better. I don't know. Let me know what you guys think about it. There's some screenshots of it I'm going to be showing you there on the screen. Let me know in that comment section. But with Walmart here, look at e-commerce sales, okay, year over year. This is the past 5 quarters. So they had a huge bump up there in e-commerce sales because they bought Jet.com, okay? So that fluffed up their numbers. That made their numbers look so good for a few quarters there, right? And then that Jet.com acquisition starts to bank year over year and sales start to fall in a major way. E-commerce is 100% the game of the future. It doesn't take a rocket scientist to understand that is the game in the future, okay? Physical retail, Walmart already won that war. I've been talking about the same thing for 2 years now. Walmart already won the physical retail war. It's all about the next war, okay, which is a completely online landscape, okay? So whatever's going on in the Walmart physical stores right now, great. 5 years from now, 10 years from now, that's not going to be going on nearly as much, okay? Even maybe 3 years from now, okay? So those sales of those physical stores will start to go down, especially in a major way, starting in about 2 or 3 years from now, especially once Amazon gets to a point where they can get, 1 hour delivery or 1 day delivery, 24-hour delivery, those type of things, and it doesn't cost you an arm and a leg. When we get to those levels, which is going to be probably within the next year or two, wait to see what happens to physical retail stores. So basically what needs to happen is Walmart needs to react in a huge way. I don't think they're doing enough in the online space. They're trying to change up their website here. We'll see what that's like. I don't think I really like it, but let me know what you guys think. Look at the numbers that analysts are expecting here. Analysts are expecting them to do around $1.12 of EPS. A year ago, they did $1. In my opinion, Walmart should not even care about EPS right now. It should just be 100% focused on growth, but whatever. Revenue estimates, analysts are expecting them to have revenue go up around 2.5%. We see it's almost, a barely, I guess you could say, growth expected there. The current year, analysts are expecting just over 2% growth. Next year, analysts are expecting around 2.7% growth. Walmart's kind of a stagnating company right now. We see their year-to-date sale, or as far as their year-to-date stock performance, it's actually down around 12% year-to-date. And so a lot going on with Walmart there. Are they taking online serious enough? I'm not convinced of it, and they should have been already on this stuff like years ago. They thought Aave just buy Jet.com and fluff up the numbers. What's that do? What's that end up doing? That doesn't really do anything for you there. So very interesting. We'll see what the online sales. That's what I think investors are going to start really paying attention to now. Is the online sales? Are the online sales, growing at? They need to be growing at 30 to 40 to 50% right now. Because remember, they're playing catch up in a big way from Amazon. So they need to be growing by at least 30+%. But really, they need to be growing 40, 50, 60% right now. We'll have to see if they put up those type of numbers. I wouldn't bet my money on it. Let's just put it that way. And the third stock to watch is Tesla. Oh my goodness, Tesla is the most talked about stock in the entire stock market right now. There's so much like negativity kind of toward Tesla right now, coming from all these different things. There's a Tesla factory safety under scrutiny after workers injured. That came out today. Tesla investor pushing for more board changes. Tesla Model 3 deliveries expected to come up short, okay? Company targeted making 2,500 of the sedans a week by March, so they might not hit that number. Elon Musk, he did an interview recently on CBS. He said he's sleeping on the factory floor. Tesla suspends Model 3 production again. It's just been bad news, bad news, bad news. Finally, some pretty much good news, I would say, came out about 2 days ago, and that is that Tesla Model 3 is moving to 24/7 production, so around-the-clock production. Elon Musk is serious about reaching 6,000 cars per week by June he wants to hit. Yesterday, it was revealed that Tesla intended to stop Model 3 production for up to 5 days. The reason given was to improve automation. However, a letter sent by Elon Musk to employees reveals the real reason for the pause in production. Tesla is upgrading the plant for around-the-clock production next week. As Electric reports in the letter, Musk confirmed that Model 3 production had reached 2,000 per week, which is double that attained in January. The goal is to reach 5,000 per week no later than June 30th. But in order to achieve that and to allow for a margin of error, Musk is setting a new goal of 6,000 per week. Going from 2,000 to 6,000 in just over 2 months would be very optimistic, if not for the fact that Tesla is introducing another shift to the production line, meaning that Model 3 will be manufactured 24/7 in Fremont. Tesla's general assembly, body, paint teams will add a third shift and require more people. Tesla is expecting to employ an extra 400 people a week for several weeks across its entire operation to help support that. So that's a big thing. Like getting a 24/7 production, I think that is something they should absolutely do. I think it's a must right now. Everybody's paying attention to those Model 3 numbers. That's so important to Tesla right now, and just kind of getting those sales out to customers so they don't cancel and things like that. It's a good decision. I think it's a decision that should have already been made, but whatever. It's good that they made it now. Okay. Also, Elon Musk sent out I don't know if I would say a nasty email to some suppliers, but a pretty hard email. Let's just put it that way. This is a quote from him. Some part suppliers will be unwilling or unable to achieve this level of precision. I understand that, and this is considered as an unreasonable request by some. It said that's okay. There are a lot of other companies with much lower standards. They just can't work with Tesla. He categorized some contractors' performance as being worse than a drunken sloth. Oh, worse than a drunken sloth, and said they would have 1 week to demonstrate excellence. Any that fail to meet the Tesla standard of excellence will have their contracts ended on Monday. Contracts ended on Monday. Oh boy. Holy smokers. So he's talking tough to some suppliers. We know they've had to make a lot of changes to some of these, I guess you say products that some suppliers are sending them. Then they end up having to send them to a tooling factory or whatnot and get them reworked. It's been kind of a bad situation. So that's what we're looking at there. And as far as the earnings actually go, analysts are expecting them to lose around $3.27 a share. Versus a $1.33 loss a year ago. They're expecting revenue growth of about 23.5%. But really, honestly, with Tesla right now, EPS numbers, revenue numbers, that doesn't even matter. They're in a type of situation that Netflix is in right now, where Tesla, all people care about is what the production numbers are in Model 3, okay? What are order numbers? What are production numbers? Whereas Netflix, people only care about subscriber numbers right now. People that own Netflix stock, they don't care about what the revenue or EPS in Netflix is really. That's like back backdoor stuff. What people really care about is the subscriber numbers in Netflix. Same thing with Tesla. People just care about what those production numbers are, and that's kind of the way it is right now. So anyways, let me know what you guys think about all three of these stocks. Do you own any of them? I'd love to hear from you guys as always. Thank you for watching and have a great day. I have some very exciting news for you guys. Just here today, I uploaded my full 11-part stock market investing mastery course into my stock market membership group. It's the first link down there in the description, and you have got to get in that group if you have not already. Listen to the unbelievable value you get from being in that group. So now you have my full stock market investing mastery course. That's a full 11-part course that goes into the entire strategy I look into when I'm looking into a stock and how I judge a stock, okay? So that's one thing. You also get a full 12-part stock options mastery course I put together as being a part member of that group, guys. So you can view those videos anytime you want when you're in that group. Stock options is a phenomenal way to hedge positions and also make money when the stock market is going down or when you think a stock is going down in particular. It's phenomenal, guys. That course will teach you all about stock options. Then also, there are several months of content. That group's been open for around 5 or 6 months now. So you have a complete catalog of backlog of content just for being a member of that group that you can go back and watch videos and whatnot. Also, you get to interact with me and 400 other serious investors in that group in the comments section. I respond to almost every single comment in that group. Other people respond, telling what stocks they're buying and whatnot, why they're buying particular stocks. If you have questions for me, you can ask me questions down there. I interact with pretty much everybody in that group. Also, every Monday I do a lesson. So I teach you about something in the stock market. And these lessons, they're extremely valuable because a lot of them I've never shared anything on YouTube and whatnot. And a lot of them go into psychology and kind of teaching you mindset related stuff in relation to the stock market. For example, just this past week, right? I did one on when to trust your gut instinct in regards to a stock versus trusting your brain. I went into that. Those are the type of examples I'm talking about. Every Monday, a very valuable lesson. Those are the type of lessons that, you cannot even put a dollar number on how much those are worth. Every Friday, I do huge videos, okay? Big videos on Fridays. And what I go into is I'm talking about stocks I'm looking into, I'm talking about stocks I'm thinking about buying for the upcoming week and whatnot, and stories I'm kind of paying attention to, what happened in the market this week in regards to my stocks and other stocks I'm looking into and whatnot. Those are really big videos. A lot of them are, 20 plus minutes just kind of going into all this different stuff I'm paying attention to, companies I'm looking into and whatnot. It's phenomenal, guys. Those are the big videos. Plus, lastly, there's a $40,000+ account I created a few months ago. Basically, I try to funnel $5,000 to $10,000 into this account each month, and we're going to build that up. That will be at least $100,000+ account probably within the next 6 months. So it's very fun building that, and anytime I place trades in that account, I tell you guys immediately. I actually post a video that same day. Hey, I sold the shares in this stock, I bought shares in this stock and whatnot, and then on those Friday videos I always show you screenshots of what that account's looking like, the cost basis is on those shares, what shares I own, and all that type of stuff, guys. So there it is, a phenomenal value. The worst case scenario is you join the membership group for a month and you cancel your membership because you don't think it has value or something. That's very few people, okay? Usually people that join that group stay in that group and love being in there. The value you get for being in there is unbelievable. $99 a month. This alone, if you were to buy this just alone, that's a $97 product. This Stock Options Mastery, that's a $199 product. Never mind all the other amazing amounts of content you get, and you can get to be in this group for $99 a month. So it's definitely worth, just joining for at least a month, giving it a try, seeing how you like it, and if you don't like it, cancel your membership. There's no questions asked. You don't have to deal with me or anything like that. But I really think you guys will absolutely love being in there, and I think you'll love being part of it, and I think it will definitely help take you to the next level as a stock market investor. So hope to see you guys in there. First link down there in the description.